Welcome back. We bring you yet one last conversation with some of the budget architects, namely the CBIC chairman and the CBDT chairman, Mr. Sanjay Agarwal and Mr. Ravi Agrawal. So thank you very much for joining us today. The question really is, there has been a lot of tax changes, but if one were to sort of chronicle one constant theme that we're seeing in both direct taxes and indirect taxes is a comprehensive review. Particularly, we're seeing it for GST also, something that even in the last GST Council meeting, we did see that an attempt at rate rationalization, the committee being the group of ministers being reconstituted, would be attempted at. Now, how can we sort of, if we were to understand the progress of this, have the GOM met again? Where does this sort of review stand, considering that the finance minister announced it in her speech today?
Yeah, regarding GST rate rationalization, I would like to mention, as you have also mentioned, that GOM was reconstituted, and now that committee is working on the rate rationalization. So whatever work has already been done has been provided to the GOM so that they can look into and they can finalize the report so that it can be presented in the next GST Council meeting. I cannot say that it will be presented in next GST Council meeting, but there can be always an attempt, because rate rationalization definitely is required to correct certain inversions, as well as for bringing the same commodity group into one rate so that the classification disputes can be avoided. So that exercise need to be taken up as soon as possible. So I agree with you on that context. But in the budget, in the finance bill, the recommendations which were made by the GST Council in their meetings have now been brought in the finance bill wherever the amendment in law is required. These amendments are mainly related to the initial years, first 3 years, when certain lapses have happened, especially with those taxpayers who are in MSME sectors. So there, the notices have been issued to them under Section 73, and where there is no fraud is involved. So in those cases, the interest and penalty itself has become huge. So there was a proposal to waive that. GST Council had made a positive recommendation that has been brought in the finance bill. Apart from that, on ITC also, so after revocation of the cancellation of registration,
Right.
as such, the returns are filed late after revocation, and in those cases, ITC was not being allowed. In addition to that, there is certain time period is allowed for taking the ITC. So in those cases where some default has happened in filing the returns, in such cases, or maybe after revocation of cancellation of license. So in such cases, ITC is now being allowed on the invoices, and the last date is that 30th November 2021. So the taxpayers have got extra time for claiming the ITC, and which they could not claim for whatsoever reason.
Right.
So these are the measures which have been taken to reduce the litigation, to facilitate the small taxpayers, to correct the mistakes which have happened in the past. Similarly, for filing the appeals, the pre-deposit has now been reduced and rationalized.
Right.
At first stage of appeal, it is now 10% with maximum of 40 crores, 20 crores for CGST and 20 crores for SGST. For second appeal, which is in appellate tribunal, earlier the rate was 20% with maximum tax, which is to be pre-deposited, was also huge. Now that has been rationalized to 10%,
Right.
and with maximum amount can be up to 40 crores. So those are the measures which have been taken to ease the cash flow position and blockage of capital. Apart from that, many other decisions were taken in last GST Council meeting. One was introduction of an optional GSTR 1A.
Right. Right.
If in GST 1 there was a demand that in GST 1, if some mistakes have happened, to correct those mistakes, some kind of facility is provided, and now this facility, optional facility, will be rolled out maybe in couple of days, so that the taxpayers, if there is some amendment is required or some additional information is to be filed before filing the 3B return, so they
Right.
can file GST 1A, and once that is filed, that requirement of amending the auto-populated entry will not be required. And because earlier that difference was leading to the tax administration asking a clarification from the taxpayer. That requirement will go if they opt for filing this optional GST 1A if need arises. So that again will reduce the litigation to a large extent.
Right.
In addition to that, on exports, if additional IGST has been paid because of upward price revision, now CGST rules have been amended so that refund can be claimed. Similarly, for ECO also, because if TCS was earlier required to be paid at 1%, that has now been reduced to 0.5%. So that will also is that the capital which is blocked of the supplier. So that will also be eased. So similarly, many other clarifications have been issued after the recommendation was
By the
received from
council.
GST Council, and some rates were also rationalized where the proposals were taken before the GST Council.
Right. Thank you for that comprehensive sort of, I think, a catch-up rather from the council meeting to also what we'll find in the finance bill with respect to indirect taxes. So, moving on to direct taxes, but on the thread of simplifying, a reassessment is one section that is being touched upon here with the intention to reduce litigation. Now, if we could sort of get a sense on the quantum of cases you think that would be affected by this, perhaps also the quantum and the value that you sort of foresee to be impacted by this.
So one cannot quantify the value or the numbers, but conceptually what we have to see is that till now there were multiple proceedings that used to happen, say in a search case or even otherwise. So that was basically not a taxpayer-friendly sort of measure, and that has been rationalized. So we have to take it, see it from that perspective. For example, in the case of reopening of cases. So reopening of cases, that happens every year, right? But then the basic process, the entire process of reopening as such was a bit cumbersome, and that has been rationalized. Similarly, in the case of search and seizure actions, where the assessments have to be done, there were multiplicity of proceedings that used to take place in different years. Different proceedings used to take place. Therefore, the consistency, there was an issue as regards consistency, because the proceedings would go on in different years for quite a long number of years. So that has been rationalized, including the rate of tax that would be, attracted in the case of such cases. So that again has been rationalized, so that people actually are prompted to declare their income once the search takes place.
So I want to stay with you for one other significant change that we saw this time around in terms of the slabs, income tax slabs. Particularly the impact we can see obviously on two slabs, one being the 3 to 6 lakh, which has now become 3 to 7 at 5%, and the other one which previously was 6 to 9 at 10%, it's now 7 to 10 at 10%. Now, the effective impact on, how many taxpayers you think would be incentivized to switch, is there an estimation, is there a thinking? And also considering that we are upcoming with the filing season now, we can also use this as an opportunity to give our viewers a reminder to file their taxes by the 31st of July. But could you give us a sense on how many have already switched? And this change, how many do you think would be further incentivized to switch?
Yeah. So I'm happy to share that about 65 or 67% of the taxpayers have opted for the new tax regime, which reflects that people are finding value in the new tax regime, and they are saving tax when it comes to the new regime as such. So one, it is simpler, because you don't have to actually bother about the deductions and exemptions. And the other is the advantage that you get as far as the tax is concerned, the quantum of tax is concerned, which is reflected from the fact that 65 odd percentage of taxpayers across the board. So it is not that it's only ITR 1 or ITR 2. It's basically taxpayers of all the sectors and segments, they are finding value in the new tax regime. Now, so far as the first two slabs are concerned, well, that actually impacts everyone. Because then, you see, whatever is the income, ultimately you have to go through that slab process. So it actually impacts everyone. And so just to give an example, for a person whose income is about 15 lakhs, the advantage is about 10,000 when it comes to the new proposals. And this is over and above the current new tax regime. So there's
Right.
there's a already existing tax regime for this assessment year, and then what is being proposed in this budget. So there is an additional advantage of 10,000.
Right.
And coupled with that, if we add the advantage on account of standard deduction, that also actually would add up to the numbers.
Right.
So therefore, for the salaried class, where standard deduction is admissible, there it is more advantageous, and people across the board, they are finding value in this scheme.
Right. Another, announcement that came about today was also in terms of, with the view to sort of reduce litigation again and provide certainty on international taxation. The safe harbor provisions would be expanded. Can we get some sort of an idea what is being envisioned here when you say that, and maybe a timeline or a clarity on how it will.
So this is basically on the issues of raw diamonds
Okay.
that this is being thought of, and because there's a you see, so far as diamonds is concerned, we have a lot of you see, there's a big industry here, and we have to actually see that how do we actually take care and provide comfort.
Right.
So the raw diamond is basically coming from outside, and then it is being processed here. So the safe harbor rules are what is being contemplated is in the context of the raw diamonds that are to be you see, obtained from outside and then processed here and then again exported back. So in that context, that announcement is there.
Right. And one question before I let you go. Mostly, I want to understand, sir, Sanjay, sir, when we talk about collections per se, can we get some sense on what the collections have been at the end of first quarter? We could not get perhaps a certainty on the June collections as of 1st July that we usually get. So could you give us a sense on where Q1 stands and particularly June collections? And in terms of how you expect the trajectory to be going, are you satisfied with the pace in the monthly collections in line for the target?
As far as the first quarter of this current financial year is concerned, GST collections were 5.57 lakh crores, gross GST collection, whereas for center the net GST collection was 2.56 lakh crores. And if we take this figure of gross GST collection, the growth was 10.1%. Whereas for center, the net collection, the growth is 9.1%. And the budget estimate for GST collection is 11% over the last year net GST collection. So, but in the later quarter of the financial year, we have seen that the growth is higher. So we are confident that the budget estimates will be achieved for GST collection. And I would also like to mention that GST collections are now intricately linked with the nominal GDP growth.
Right.
And the GDP growth last year was nominal GDP growth was 9.6%, 9.6, and the GST gross GST collections had gone up by 11.6%. So if you see these figures, the tax buoyancy was something like 1.21. So which was very good tax buoyancy, and I would like to mention that that shows that GST inherent efficiencies as well as rise in compliance level. And on behalf of tax administration, I would like to express through your channel my gratitude to the taxpayers that compliance levels have gone up.
Right. And on that's a wonderful note actually to wrap this up, and we hope that trend continues. Thank you so very much for joining us today this evening. And it's a wrap from the CII headquarters here in New Delhi. This is Janani Janarthanan for NDTV Profit and NDTV 24/7.